the Nevada dream. For decades, it was a promise whispered on the wind, a beacon of endless opportunity, stunning landscapes, and a prosperous life built under the desert sun. People flocked to the Silver State, chasing fortunes in the glittering casinos of Las Vegas, seeking quiet retirement in peaceful river valleys, and building families in rapidly growing suburbs. The state was a symbol of explosive growth, a place where a piece of the American dream felt not only possible but attainable. But now, for thousands, that dream is getting a major reality check. The foundation of that promise is cracking. The relentless boom has hit a wall, and in its place a perfect storm is gathering. A rapidly cooling housing market, stubborn economic headwinds, and the harsh reality of an affordability crisis are creating a new, uncertain chapter for Nevada. The frantic gold rush mentality of the past few years is over, and the consequences are now coming due, leaving many residents and recent arrivals trapped in a situation they never saw coming. In this video, we're counting down the 10 Nevada cities that are showing the most severe signs of this economic turmoil. These are the places where the dream is fading the fastest, where home inventories are piling up, where the market dynamics have shifted violently, and where the economic future looks increasingly bleak. We're going beyond the headlines to analyze the specific data and local factors that are contributing to this downturn. Stay with us as we uncover which city is at the epicenter of this shift. The dream of affordable living and endless growth in Nevada is changing. For many, it's becoming a challenge. We're about to show you where a historic housing market correction is underway, and local economies are showing signs of stress. The numbers don't lie. What was once a sure bet is now a risky gamble. And in these 10 cities, the house is showing signs it may not always win. The countdown begins. We'll start our countdown with a city that has long been a haven for those seeking a quieter, more affordable alternative to the chaos of Vegas, but is now facing its own set of serious economic challenges. Number 10, Mesquite. Nestled in the picturesque Virgin River Valley, Mesquite has long been a popular destination. For retirees and golf enthusiasts, its appeal was simple: a small-town feel, world-class golf courses, and a lower cost of living, all within a short drive of Las Vegas. During the pandemic housing boom, Mesquite saw a surge of interest from people cashing out of more expensive markets looking for that perfect desert oasis. But in 2025, the calm has been broken by unsettling economic tremors. The market is now officially a buyer's market, meaning the supply of homes is greater than the demand. Homes are sitting on the market for an average of 80 days, a significant increase from previous years, while the median listing price hovers around $396,000. The median sold price has dropped to $359,000, revealing a growing gap between seller expectations and buyer reality. In fact, nearly 3/4 of all homes sold in Mesquite go for under the list price, a clear sign that sellers are being forced to slash prices to make a deal. What's driving this? A slowdown in retiree arrivals is a major factor. The very people who fueled its growth are now facing economic uncertainty themselves. Fixed incomes are being squeezed, and the appeal of moving to a resort town diminishes when discretionary spending tightens. Data from early 2025 shows that while listing prices were up slightly year over year, the actual median sale price dipped by 4.4%, and the number of homes sold dropped by 25% compared to the previous year. This combination of falling sales volume and sellers having to accept lower offers points to a market in rapid cooldown. The dream of a stable, ever-appreciating retirement property in Mesquite is being replaced by the reality of a shrinking buyer pool and eroding values. Number 9. Silver Springs. For years, Silver Springs, located in Lyon County, was a town riding the wave of industrial spillover from the Reno-Sparks area. Its promise was affordable land and a straight shot to the growing job markets of northern Nevada. It was a place for workers, for families who were priced out of the bigger cities, a frontier town on the edge of a boom. During the industrial expansion, particularly with the arrival of major tech and manufacturing companies in the region, Silver Springs seemed perfectly positioned for sustained growth. However, That spillover effect is fading, and the town is now in a clear market correction phase. The economic engine of the nearby industrial parks has slowed, and with it, the demand for housing in satellite communities like Silver Springs. The town's fate is intrinsically tied to the economic health of its larger neighbors, and as those areas face their own headwinds, Silver Springs is feeling the impact disproportionately. The narrative of this town is one of arrested development. The once feverish pace of new construction has slowed to a crawl, and the speculative buzz has evaporated. What's left is a community grappling with economic uncertainty. It serves as a stark reminder that when a local economy is almost entirely dependent on external growth, any slowdown in that growth can leave the community dangerously exposed. The dream of being the next great Nevada boomtown is on hold, and residents are left wondering if the wave they were riding has permanently crashed. Number 8. Laughlin. Nevada's other casino town has always been the more laid-back, budget-friendly alternative to Las Vegas, situated on the banks of the Colorado River. It attracted a steady stream of tourists and retirees with its riverboat casinos and affordable lifestyle. But beneath the neon glow, Laughlin's economy has been fragile for years, and the current economic climate is exposing its deep vulnerabilities. The town is facing a harsh reality. Its core tourism and gaming industries are struggling. Competition from tribal casinos in neighboring Arizona and California has been chipping away at its customer base for years. Recent economic data paints a grim picture. Laughlin was one of only 2 gaming jurisdictions in Nevada that failed to see its gaming revenue recover to pre-pandemic levels in 2021, a year when the rest of the state saw record-shattering numbers. This points to a fundamental weakness in its economic model. This economic strain is now clearly visible in its housing market. The town is experiencing what some might call investor hesitancy. Those who bought properties hoping to capitalize on tourism are now facing a market with declining visitor numbers and a shaky economic foundation. While some reports show a recent uptick in median home prices, this is often a volatile metric in a small market and masks underlying issues. The bigger story is the town's struggle for economic relevance. There are significant structural challenges, including a lack of essential services like a major hospital, which forces residents to travel to Arizona or Las Vegas for serious medical needs. The population is aging, with an average age near 60, and about 1 in 5 residents lives below the poverty line. The dream of a vibrant resort community is being threatened by the nightmare of economic stagnation and a future that looks increasingly uncertain. Number 7. Fernley was once a poster child for the Nevada boom. Located along a major transportation corridor in Lyon County, it experienced an explosion of growth, fueled by logistics, manufacturing, and its proximity to the Reno-Sparks area. It became a haven for working-class families seeking affordable new homes. The landscape was dotted with new housing developments, and the town's population swelled. Now, that boom has turned into a glut. As of June 2025, Fernley's housing market is described as balanced, a stark change from the seller's market of previous years. While median home prices have shown a modest year-over-year increase, this small gain is overshadowed by other, more concerning metrics. The inventory of homes for sale has increased, yet the number of homes sold has been declining. The most telling sign of trouble is how long homes are staying on the market. In mid-2025, a staggering 85% of homes took between 30 and 90 days to sell, with another 12% taking even longer. This is a dramatic slowdown. The industrial and logistical buzz that once powered the town has quieted, and the once insatiable demand for housing has cooled. The frantic pace of new construction has slowed dramatically, leaving some developments in limbo. The dream of endless growth has collided with the reality of oversupply, leaving Fernley in a precarious position. Number 6. Elko. Deep in the heart of northeastern Nevada, Elko has long been the state's primary gold mining hub. Its fortunes rise and fall with the price of precious metals, creating a cyclical boom-and-bust economy that defines life in this rugged corner of the state. For generations, high-paying jobs in the mines fueled a stable, isolated, local economy, allowing residents to build a comfortable life. However, the current cycle is leaning towards a bust, and the economic pain is becoming palpable. The mining industry is facing significant headwinds, including fluctuating commodity prices and increased operational costs, leading to layoffs and hiring freezes. This slowdown is directly impacting the housing market. The once stable demand from well-paid miners is evaporating, leaving a vacuum in its place. While Elko's housing data doesn't always show the dramatic double-digit drops of other cities on this list, the stagnation itself is the story. In an inflationary environment, a market that isn't growing is effectively shrinking. Population growth has stalled, and the economic diversification that could buffer the town from mining downturns has been slow to materialize. The dream of a secure, high-waged life supported by the gold industry is becoming a challenge for those who are now facing an uncertain future. They are caught in the classic trap of a single industry town. When that industry falters, the entire community is at risk. The epicenter of the crisis. We are now entering the top 5 cities on our list, the places where the economic storm is hitting the hardest. These are the communities where the metrics show a clear and dramatic shift from boom to bust, and where the Nevada dream is most visibly unraveling. Number 5. Sparks has always been in a complicated relationship with its bigger, more famous neighbor, Reno. For years, it was considered the more affordable blue-collar sibling. But during the pandemic housing frenzy, Sparks found its own spotlight. As Reno's prices skyrocketed, buyers flooded into Sparks, driving up home values at an unprecedented rate. Now in 2025, Sparks is a chilling cautionary tale of what happens when rapid speculative growth collides with a hard economic stop. Market is defined by a severe oversupply of housing. The very developments that were a sign of its boom are now a symbol of its correction. Active inventory in the Reno Sparks area was up by 45.1%. Demand has cooled dramatically, and the once hot market is now ice cold. While population projections still show growth for Sparks, this is a long-term forecast that doesn't capture the immediate pain of the current market correction. The story of Sparks in 2025 is not about population numbers, but about value destruction. People who bought at the peak, believing they were getting in on Nevada's next big thing, have seen their equity evaporate. The dream of building wealth through homeownership in Sparks has become a nightmare of being trapped in an overvalued property in a flooded market. Number 4. Carson City as the state capital. Carson City has traditionally been insulated by the stability of government jobs. It was seen as a safe bet, a community that could weather economic storms better than more volatile cities. During the boom, its location near Lake Tahoe and Reno made it an attractive destination, and prices climbed steadily. But in 2025, that stability is being severely tested. The capital city is now facing a significant housing market downturn. While average home values are still up slightly year over year, some property types have seen sharp declines. Prices for 5-bedroom homes dropping by over 16%. The number of sales has also dropped, and homes are sitting on the market longer. The unemployment rate for the Carson area was 4.4%. In June 2025, the affordability crisis is a major culprit. The influx of remote workers and those fleeing California's prices drove values to unsustainable levels. Now that the pandemic migration has cooled, the market is struggling to support those inflated prices. For a city built on the promise of stability, the current volatility is a shock to the system. The dream of a secure investment in the state's capital has been shattered by the reality of a rapid price correction. Number 3. Henderson. For decades, Henderson was the crown jewel of southern Nevada's suburbs, consistently ranked as one of the safest and best places to live. It attracted families and affluent buyers with its master-planned communities and high quality of life. During the housing boom, its reputation made it a prime target for investors in relocating families, pushing home prices to dizzying heights. However, 2025 has delivered a profound chill to Henderson's once invincible market. Even in this traditionally stable city, the signs of a major correction are undeniable. Inventory is surging. As of July 2025, the number of homes for sale increased by 9.1% compared to the previous month. The inventory for larger homes, those with 4 or 5 bedrooms, saw increases of 11.6% and 9.7% respectively, while the average home value is still up slightly year-over-year by about 1.9%. This small gain is deceptive. A huge number of homes, nearly 58%, are selling for below their asking price. This shows that sellers are losing their pricing power at a rapid pace. The city is officially in a buyer's market. The problem is, even with more negotiating power, many buyers are priced out or spooked by the market's direction. Primary culprits are severe overvaluation from the pandemic boom, combined with the impact of higher interest rates. The dream of a safe, appreciating asset is turning into a challenge for sellers who are watching their equity vanish as inventory piles up. Number 2. North Las Vegas. North Las Vegas was the epicenter of speculative frenzy during the housing boom. It was a city of explosive growth, with vast tracts of desert being transformed into sprawling subdivisions almost overnight. It offered the promise of a brand new home at a more affordable price point than Las Vegas or Henderson. But that rapid, often unchecked, growth created a fragile foundation that is now showing cracks. Today, North Las Vegas is facing a severe economic reckoning. The city is confronting fiscal pressures and has even proposed personnel reductions to balance its budget. While the city's leaders highlight ongoing development, the on-the-ground reality for the housing market is grim. The very neighborhoods that symbolized the boom are now at the forefront of the correction. With a rising number of homes for sale and a palpable sense of investor retreat, the city's reliance on warehousing and logistics jobs makes it vulnerable to economic slowdowns. Its residents often have lower household incomes compared to the rest of the Las Vegas Valley, making them more susceptible to the pressures of inflation and economic uncertainty. This economic vulnerability, combined with massive overbuilding, has created a perfect storm. The dream of affordable homeownership that drew so many to North Las Vegas is becoming a challenge for those stuck in a community with an uncertain economic future and a housing market saturated with sellers. The worst city in Nevada's collapse, and now the number 1 city on our list, the city that best represents the cool-down of the Nevada dream. A place where a perfect storm of market forces has created one of the fastest cooling housing markets in the entire country. Number 1. Las Vegas. Las Vegas Las. The name itself is synonymous with spectacle, risk, and fortune. During the pandemic, it became the poster child for the Sunbelt housing boom. Fueled by an unprecedented influx of remote workers and investors, the median home price soared to a record high. It seemed like the party would never end. But in 2025, the party is over, and Las Vegas is facing a brutal reality check. It has been named one of the fastest cooling housing markets in the United States. The numbers are staggering and paint a picture of a market in a sharp downturn. According to a recent report, home sales have dropped, with sales for single-family homes down 5.8% year-over-year as of July 2025. At the same time, the inventory of homes for sale has skyrocketed. The number of single-family homes on the market without an offer was up 54.2% from the previous year, while condo and townhome inventory was up a massive 77%. This has pushed the housing supply to a 4-month inventory, double what it was a year ago, signaling a dramatic shift. Homes that once sold in days are now sitting for much longer. And while the median price has hovered near its record high, this is a fragile ceiling. When adjusted for inflation, prices are effectively down. Moreover, the Las Vegas area's unemployment rate was reported at 5.8% in June 2025, among the highest for major U.S. metro areas. It's adding another layer of economic stress. This is the perfect storm. A massive surge in inventory, a collapse in buyer demand, stagnant prices that are falling in real terms, and a vulnerable local economy. The dream of quick riches and easy living in Las Vegas has become a nightmare of market saturation and economic uncertainty. It is the undisputed epicenter of Nevada's housing market cooldown,
Stay ahead in the market, subscribe to the Real Estate Scouts, and get the best real estate tips delivered to you.
So there you have it, the 10 Nevada cities where the dream of prosperity is meeting the harsh reality of a market correction. From quiet retirement communities to the bustling heart of Las Vegas, no corner of the state is entirely immune. Factors are complex, a combination of post-pandemic market normalization, an affordability crisis, higher interest rates, and local economic vulnerabilities. What we're seeing is not just a dip in prices. It's a fundamental resetting of the market. The era of easy money and guaranteed double-digit appreciation is over. While Nevada's population continues to grow, the housing market is facing a rocky and uncertain road ahead. This is a story that is still unfolding, and the long-term consequences are yet to be seen. But one thing is clear: the Nevada of today is not the Nevada of the boom years. The landscape has changed, and for many, the gamble on the Silver State is no longer paying off. What do you think? Are you a resident of one of these cities? Are you seeing these trends in your own neighborhood? Let us know your story in the comments below. Your insights are a valuable part of this conversation, and if you found this analysis valuable, make sure to hit that subscribe button and ring the notification bell. We'll continue to track the economic shifts and housing market trends across the country, bringing you the data and stories that you won't find anywhere else. Thanks for watching.